Blue Star declared numbers yesterday afternoon. Numbers on the face of it were not looking good, but there was an adjustment over there. You adjust the numbers and the profitability is looking extremely strong for Blue Star. Plus the revenue growth coming in at about 19%, which was again a strong number. 2 to 3 odd % decline. Let's welcome in the management at Blue Star. Vir Advani, Managing Director at Blue Star, is now joining us. Mr. Advani, if you could just start by the unitary cooling products. What happened over there? The growth over there, not only for you, but for industry, did very well.
Yes, good morning. Thank you so much. Unitary products, we had a very great quarter. Our room air conditioner business grew by 38% versus the market growing at 27%. Our water cooler business grew at 22%, the market grew at 12%, and our deep freezer again grew at about 20%. So overall, very strong quarter for unitary products. Margins held as well. As you can see, operating margins have held and pricing in the market is held as well. We're now looking forward to the remaining part of the year because the monsoon has started well and is expected to close out well, which means that the festival season should be strong as well.
Right. Overall for the last 1.5 or maybe 2 years, we are seeing the unitary cooling or the AC business doing very well for the industry. Do you think now the growth rates may moderate going ahead?
Yeah, so this is what you call a golden summer if there was one. We had a very hot summer, pricing held, we had the right product portfolio, and I think general preference to buying room air conditioners was strong. Of course, we have a few more benefits coming our way this year. There's the pay commission, which should affect the numbers positively for the rest of the year, and of course there's a good monsoon. So while we will not, it's unlikely that the overall industry will continue to grow at this rate, but it should be a very good year overall.
Right, but just the point that you made, that last 2 years monsoon was not that great, summer was slightly extended, plus the weather saw a sort of slightly more heat coming in. Do you think that will change with this monsoon? That will change with a lot of penetration that you would have done versus what you would do now, say if there is a slightly higher summer?
Sure. So, the buying in the summer and the buying post-monsoon tends to be a little different for room air conditioners. The extreme summer here has led to, right from metros down to tier 3, tier 4 buying. The monsoon typically affects tier 3 to tier 5 buying. And so, on a comparative basis to last year, with a better monsoon, we should expect a better second half as well. I don't know if I explained myself clearly. But, and therefore, this combination of a strong summer and a good monsoon is always an ideal situation for the room air conditioner business as an industry overall.
Sir, the project business revenues, or the EMP segment as you call it, also did good growth with 25% plus number?
Yes, so in the projects business, I'll try and explain that. We had strong revenue growth, about 25%. We've been showing strong order inflow over the last 3 quarters. I think you've been seeing that, including in Q1 of this year. Order inflow was up about 33% in the segment. So revenue is an outflow of that. The operating margins have been depressed in Q1. I want to explain that for a minute. What is happening is that order inflow is strong. Order booking margins are pretty good. They continue to be. However, execution is still slow. Because execution is slow, we're seeing delays in projects. Keeping in mind the past experiences, we are being a little cautious right now about revenue recognition and, more importantly, margin recognition in the business. And so we have been conservative in Q1. I hope that as the cash flow in the economy improves, and we can see signs of that, you should see this revenue momentum holding, but the operating margins actually improving quarter on quarter. And therefore, for a full year basis, we see operating margins of the EMP business being better than last year with a higher revenue.
Right. So the press release mentions that you would look at a greater prudence on accruing project level costs and revenues to improve consistency of financial performance as one of the reasons for the low margins during the quarter. Is it largely telling us that you would be very selective in projects going ahead, which means the order flow, order book momentum may not be that great?
So as I just mentioned, our order inflow is strong, 33% growth in order inflow in Q1. For the full year, we expect to see order inflow up about 30%, which will lead to revenue growth. We're just, like I said, in Q1, the margins are lower on a standalone basis. But on a full year basis, we are certain that they'll be better than they were last year. So we're on a recovery trajectory. You have seen over the last 2 to 3 years, we've gone from a negative margin on a full year basis in segment 1 to a positive margin. Last year was about 4% overall for the year. We expect this year to be better.
Right. So just a last word, and if I look at all the numbers, we've spoken about 2 segments which have done well, but professional electronics and industrial system business saw a bit of decline. Any particular reason?
Yeah, just explain that, and then I'll take a minute, if I may, on the overall performance of the company. So first, on segment 3, we've seen a dip in revenue as well as in margin, in absolute margin. 2 reasons. One is that banking sector capex has been very slow. So part of our business is serving the banking industry. The second is that what we've been talking about the last 2 quarters, the oil and gas, petrochem, steel industry, which is another major segment of buying for us, again, capex has been slow. We do expect the year to improve, and on a full year basis, segment 3 will do better than last year. Coming to the overall numbers of the company, if you give me 30 seconds, while the results show a revenue growth of 19% and a profit growth of actually a negative profit growth, I just want to explain the numbers. In Q1 of last year, those numbers include Blue Star Infotech consolidated numbers. You may recall that we have sold that business in Q4 of FY16. Therefore, Q1 FY17 has 0 revenue, 0 profit from the IT business. If I extract the IT business from Q1 of last year, I'm happy to tell you that revenue growth has been much stronger at 29% on a like-to-like basis, consolidated company. And the PBT before exceptional items is actually up 32%. So very strong performance in the quarter, largely driven by unitary products, but also EMP and segment 3 looking good for the rest of the year. So that's the wrap-up of our performance.
Right. Sir, thank you so much for explaining the numbers. That was the management of Blue Star talking about each segment and what is the way forward going ahead. The name is down 3%, but after the results came out yesterday, it saw a movement of about 1-2% on the higher side. On that note, we are taking a break. Nifty is up 20 odd points, so it went up about 40 odd points, but then again continues to be in a very, very small range with a marginal positive bias.